Good day, fellow investors, if it can be called a good day, because I picked up my kid from school, came back home, turned on my computer, and I see this. A crash of 2% to 3% for the Nasdaq. By the time I filmed this, prepared and everything, we are already down 4%. Now, the news there are stocks rout picks up steam with recession warnings. As Trump said, the US might feel a little disturbance, just a little disturbance, and there are geopolitical risks, rising volatility, elevated inflation, higher than expected. We have seen a little bit of weakness in employment, tariff back and forth rolls. US credit risk rises also, which is another factor to consider when it comes to investing. But we have discussed this, how just from a fundamental perspective, the market could crash another 40%. Recession, bubbles, interest rates, it's all now piling up. Plus there are these hidden bubbles in private equity, but that is just the standard that probably you already know if you're following this channel on fundamentals. It is overvalued. But let me give you a prediction that might twist things a little bit, and I'm surely it's not what you expect. Because when we look at data, pessimism is climbing, so bearish sentiment is going up, and then less people buy stocks, more people sell stocks, and consequently have what we are witnessing now. There are also a little bit higher volatility, is not crazy spikes in volatility, but again, you see this, it's nothing new. We had this in early August this year, we had some in December, and we are here again. Of course, it's not the calm before the storm, but that's also something. Now, just on the short term, this is important to comment, as money has to flow somewhere. Now people today, there is more demand for bonds, and therefore the US Treasury bond yields are declining a little bit. But anyway, going to my prediction, let's start with this. I told you all you need to know for 2025 investing, with Buffett having 300 billion in cash, and then we compared also that to all the S&P 2025 year-end forecast, 7,000, and everyone was expecting 10% or higher returns. Goldman said the market will reach 6,500 by year end, and then they had those projections based on huge growth in earnings, and even higher earnings for the S&P 500 went to 311 for the market. But from a fundamental perspective, you can't make much on a yield of 1.2, now 1.3%. If the market crashes another 40, 50%, the yield is 2.5%, still not miracles. But when it comes to my prediction, I'm going to tell you that in the next 6 months, we'll be talking again about something third, something perhaps that's not even on the radar now, because I look at all the news and they bombard us with this, then it's China, then is, I don't know, oil, then is this crisis, then is rockets there, this or that, and then is always constantly something that maybe it's fear, maybe it's exuberance, AI, this or that. There is always something there. And my prediction is that 6 months from now, or by the end of 2025, we will be discussing something else. We have recently discussed how Ray Dalio sees in the next few years a credit crisis for all the US government and also in Europe, failed auctions by Soros management projected in the coming 12 months. Keep in mind, if there is a recession, that doesn't bode well for government income. Less activity, less government income, thus harder to refinance the deficits that are already piling. Now everyone in Europe is increasing defense spending, okay, but that's also needed more money. More pressure on the markets, therefore I say the 10-year treasury going down yield a little bit is just a daily supply and demand situation, the long-term trend on fundamentals is clear there. So maybe it will be a debt crisis, maybe recession, maybe unemployment. Maybe in the next 3 months we have 3 months of bad things, then the Fed goes brrr and we print out of everything. Then in the next 8 months we have super inflation, we have deflation. So my prediction is that nobody knows what we will be talking about 6-9 months from now. That's a certainty. But what is another certainty? And that is value investing. If we go to this beautifully designed website and then look just a little bit at annual reports for 2024, and then if you scroll, there is the letter discussion owning businesses, and then you come here, operating earnings 47 billion, okay, adjust for insurance. Maybe if there is a recession, this goes down a little bit. Maybe they will make 30 billion, maybe 25. If there is no recession, they will make 40, 45 again. Then if I keep on scrolling down, then I get to the balance sheet. And look at this, the balance sheet, short-term treasury is 285, let's say 350 billion in cash. So what is value investing? Is whatever happens, I'm okay. Stocks go down, I deploy the cash, in this case Warren Buffett situation. If you own another business, if you are sure that the business will make money over the next 10 years, then that's value investing. And then no matter the fluctuations of the market, you are okay because you're a business owner. And that is value investing. Whatever happens, I'm okay. Amazon, if we look at Amazon here, it is down from the peak 20%. So Amazon stock crashed last month. But did much change in Amazon's business? I don't think so. So if you like this business at these prices, given what it offers, then you should be happy because it crashed, because you can repurchase on your monthly investments at lower prices. That's it. That's the whole situation when it comes to investing. And you can check my portfolios on my research platform, value investing strategy, long-term compounding. That's what I do. We have been beating the market since 2002. Thanks for watching. I'll see you in the next video.